Is your company the lessee of property or non-property assets? If so, you could be wondering just how you're going to handle the new lessee accounting standards. Well, don't worry. Oracle has you covered with the Balance Sheet Lessee Accounting features. The International Accounting Standards Board (IASB) and the Financial Accounting Standards Board (FASB) have issued new standards requiring lessees of property and non-property assets to account for the leased assets and the liability associated with them on their balance sheets. These assets are called right of use assets. These new standards provide investors and creditors with more transparency into long-term leases of assets. The JD Edwards Enterprise One financial management system has been updated to address these new accounting standards using the new Balance Sheet Lessee Accounting feature. We have taken the lease management functionality already present in the real estate management system and combined it with the financial management system to create a complete solution. Don't worry, you are not required to purchase licenses to real estate management to handle the balance sheet lessee requirements. First, let's take a look at the overall process. The lease administrator creates leases in the system for all your leased assets. When creating the leases, the lease administrator also creates the lessee assets. This can be done interactively while creating the lease or manually through standard processes. For non-property assets, you create an asset record in the fixed asset system. For property assets, you set up a unit and associate the unit with an asset. The system has been updated to enable you to automatically create asset records when you enter a unit record. You then enter recurring and manual billing information. The system uses the billing records to determine whether the lease payments have an impact on lease liability and if they should be included in the balance sheet lessee accounting process. The accounting manager reviews the lease and approves the lease terms. Once the lease is finalized, you can create amortization schedules for your leased assets. The system creates an ROU asset schedule and a lease liability schedule. Once the amortization schedules are created, you generate the lease commencement journal entries, which provide the initial lease liability, and ROU asset journal entries you need to account for your leased assets. You then process the monthly recurring billing information for your leases. Additionally, you perform a monthly balance sheet lessee accounting process to create the journal entries that are needed to adjust the lease liability, ROU assets, and other accounts. The system updates each line on the amortization schedule during the monthly accounting process. Additionally, the system notifies users when this monthly process is overdue. You continue running this monthly process until your lease ends. As you see, Oracle has you covered when it comes to balance sheet lessee accounting. Using these new program features, you can easily and efficiently account for leased property and non-property assets and thereby meet the requirements of the IASB and FASB accounting standards. To learn more about balance sheet lessee accounting, see the online JD Edwards Enterprise One Applications Documentation Libraries on www.docs.oracle.com or visit us online at learnjde.com. Thanks for watching.